Gang. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer, and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you, in light of your own financial condition. There is the position disclosure. The only new position on there is that I've got some TQQQ short. Not a lot. I had a lot at highs, actually. I thought I had too much. And then, to my surprise, TQQQ short ended up being my best name on the day. Not what I expected. Man, I'm getting sick of this. This market's getting really difficult here these last few days. And I'm just getting sick of this tariff crap, dealing with it, being totally honest. I mean, this is just the stupidest thing I've ever experienced over the course of my trading career. This useless, self-induced bear market that we've created over insanity when the guy can't even do the math right. It's really, really upsetting. It's upsetting for everyone, and they're talking about, like, we don't care about Wall Street, we only care about Main Street. As if Main Street doesn't have IRAs, as if Main Street doesn't have 401ks, as if Main Street doesn't have to buy things at 104% markup because they're being imported from China and we don't have the capacity to build them ourselves. This is just the stupidest thing I have ever experienced in the entirety of my trading career, and it's getting really frustrating. There's so much reason for them to be able to come back out and say, hey, we're going to pause for 90 days. Hey, we got 70 countries that are reaching out to us because they want to make a deal. So we're going to pause for a couple months to give all these countries that want to approach us to make a deal the opportunity to do it. You just turn on 10 to 100% plus tariffs on any nation in the world overnight. No one is prepared for that. We're not prepared for that. You got to give the companies, if you want to do tariffs, you got to give the companies in the United States some runway to be able to build out and adjust their factories. I mean, this is just the stupidest thing and the stupidest policy I have ever seen. They're wrecking the economy globally at this point. They're wrecking the stock market. And it is just so insane. It is so insane that they won't switch to anything at this point. We went from up 4% plus on the day to, oh, wow, is that a true headline? The S&P, I was just about to try to figure out the numbers. S&P 500 has posted its biggest intraday reversal in history. Coming from Josh Leffler, assuming that that's true. My P&L also had its biggest intraday reversal in history. Holy cow. And that's with that great rally we had in the last 10 minutes. I mean, this is just insanity. Like, what the hell are we doing? What are we doing? Oh, man. Look at these candles on the daily chart. These movements are so big. I actually still think this is viable. I still think that, the risk on any headline is to the upside, but, and we got the VIX. The VIX got to 60 just about again into the end of the day. What was that high right before that pullback? 58. VIX 60, you buy the stock market. I also, though, agree with Pat that now today is only technically kind of like a day one. And that's concerning. That's concerning. The S&P from yesterday's close, the S&P high was up 4% and the low was down 3%. Holy cow. 7% intraday move from highs to lows. I still think that the risk is to the upside. I still think that VIX 60 is something that you buy. I still think that down $40 of extension or whatever in the SPYs is something that you buy. But it's a day one, and there's an event tonight. Like I was just saying, You turn on 10 to 100%. I mean, 10% is ridiculous. Honestly, 10% tariffs are ridiculous. But we're like, you got to be like a special country that only has penguins that live on it to get 10%. Otherwise, you're probably getting more than that. 10% to 100% tariffs, and no one's prepared for it. So they got to do something. They got to announce something. If they don't, this is the most negligent administration in the history of the United States to let people just suffer baselessly when we're not properly prepared for it. You want to go to war? Because we're at war right now. You want to go to war, then you prepare to go to war before you go to war. You build the tanks, you build the ships, you build the weapons. That's what you do when you're preparing to go for war. You don't just say, "Hey, all of a sudden, let's do a draft and draft everybody. We're going to war." I mean, this is beyond negligent. This is beyond stupid. We created a bear market for no reason. Recession odds are going through the roof. There is still a possibility that we can get out of this. But they got to do something. They got to say something. I mean, it's coming from like I said in the morning meeting today. I like I think that the risk is to the upside in this market from a headline perspective, because now just about every single like semi-sane person is like, "Yo, what are we doing?" And some big names, Bill Ackman, huge Trump supporter, coming out being like, "Dude, what are you doing?" Stanley Druckenmiller helped Scott Bessent get going in the business. He's like, "Dude, what are you doing?" I mean, even Elon Musk. Elon Musk is coming out. He's like, "Dude, what are you doing?" It's literally pretty much just Donald Trump himself and maybe one or two other people, one of whom Elon Musk tweeted out today is a moron. That's his quote, not mine. That are actually still supporting this. I mean, this is insane. But it's very hard. It's very, very hard on how you want to position yourself right here, because everything that I'm looking at for the most part says that you still want to buy this market. The headlines at this point squeeze us higher on good news than they hit us down on bad news. But they're not hitting us down on bad news. We're still going down on bad news. It's just that the risk is so dramatically to the upside on positive headlines compared to negative headlines, and you can just see that in the price action as it actually comes out. You get Vixen 60, I want to be a buyer. You get the market that's this extended, I want to be a buyer. But it is a day one, and if they just turn on 100% plus tariffs on everybody tonight, you could see us down 5 to 10% tomorrow. So what do you do? It's very, very hard. I want to be long this market. I am long this market, but it's not impossible for us to be down 5 to 10% tomorrow. And then what? I don't know. Like where and when does he pivot? There has to be a pivot that comes at some point, right? You got, like I keep saying, you got 70 countries or whatever is what they're telling us, knocking on your door begging for negotiations. Well, when are you going to come out and say, "Hey, guess what? We had negotiations with someone and there's a deal"? When's that going to happen? Like do it already. What are you waiting for? Are you not answering the phone? Are you not taking the calls? It's just the most asinine thing ever. Like, I mean, he delayed Mexico and Canada. He gave them a month and ended up not doing it. Could easily do the exact same thing here. And like I'm saying, like, we know that with the egos involved and everything, that they don't want to do an about face and have egg on their face. But there's like, from a PR perspective, it is so clearly like obvious that you could come out and you could position this in a way that makes it sound like you won, and also mitigate the damage to the economy and the stock market that's coming from this. I mean, this is just getting upsetting. So I don't know. It's day one to the downside. It's the biggest S&P 500 reversal in history. We approached VIX 60 at lows. We approached $40 of extension to the downside at lows. It's just the most unique situation that I've ever been in, because in every other bear market that I've ever experienced in the COVID bear market, as an example. The idea was that everyone was doing everything that they possibly could to help. And in this situation, what makes it so unique is it seems like people are primarily the people who matter are primarily only doing things that hurt. And honestly, the Fed should do a rate cut. They should do an emergency rate cut, but they shouldn't have to. They shouldn't be put in this position where they have to, because growth is slowing down so much uh, from a from this self-induced tragedy that we're putting ourselves through. But it's very hard. It's very hard. If you put a bagel to my head and you said, Derrick, right now at SPY 495, you need to either buy stock or short stock, I would buy it. I would buy it because, I mean, somebody's got to make a move here, and that risk is to the upside. But I don't know. This is the craziest thing I've ever experienced in my entire career trading. And it's complete. What throws me is how illogical it is, because I'm a trader who trades based on logic. I think that's where it comes from. When you just start having everything be based on illogical decisions moving the market, it's very, very hard for me. I don't really have anything else to say about it. I took the opportunity to de-risk a bit into the up move. I took an opportunity to short some Qs into the up move. T-triple-Q short is from Trump. Japan, South Korea flying here now to make a deal. We're doing well on tailored tariff deals. Well, give me one. No market uptick on that. I don't think that's enough anymore. I like on Monday, if Trump announced we have a deal done, then we would have ripped. But at this point, you're telling me that they're flying here to discuss a deal. It's not enough. It's not enough. And honestly, probably getting one country done is not enough, even though Japan's an important one. Like you need to actually, like, I don't understand, if they're flying here now to try to make a deal, why are you going to hit them with the tariffs tonight? Extend it till their leave. Give it a week or 3 days, even, however, whenever they're planning on arriving to whenever they're leaving. This is just so stupid. So anyway, into the gap up this morning, we were up 4+%. Any buying that anybody did yesterday morning at these lows is what we were saying. Book profit into it. What I was describing at those highs was to be greedy but not stupid. I stand by that. It made sense to book additional profit into that large of a gap. I did think that it was very possible for us to actually get follow through on this gap fill to get up to 536. And I thought that it was possible that if real positive news actually occurred, that we could retest 550. That didn't happen. We only got incrementally bad news pretty much throughout the day and zero positive news. It was still a great opportunity to be able to book some profit at yesterday's highs. The SPYs themselves, did not break yesterday's low. Most of the Mag 7 names did not break yesterday's low, though a lot of individual stocks certainly did, as the IWM almost got down to yesterday's low. The IWM and the Qs are both inside days, I'm pretty sure. Right? Q high yesterday was 413. Yeah, we are an inside day on the Qs today by 1 penny. Today was an inside day. That shows you how crazy these ranges are. It was the biggest reversal in S&P 500 history, but it's an inside day for the IWM and the Qs. And almost an inside day for the SPYs. Holy cow. Holy cow. Yeah, I don't know. I don't know. I felt like I did a decent job taking some risk off at this high. I thought I was being greedy but not stupid, and I even put some T-triple-Q short on. I put a little bit of I had a Palantir day trade short above 85 today that made me a few dollars. And hindsight being 2020, it wasn't enough. when you got the biggest reverse. I did not expect us to necessarily reverse this hard, but it makes sense. I mean, who really wants to take risk into the overnight tonight when you know, I don't know. It's so hard. I mean, you wonder at what point it's some degree priced in or not. But I don't know. The other interesting, notable occurrence we're starting to see is really selling coming in across the board. Look at this TLT move. I've spoken about this a number of times over the years. We have not had a good opportunity to actually see it. Unfortunately, we do right now. And that is the fact that in bear markets, they, at a certain point, begin to sell everything because you need to raise cash. You're getting a margin call in your equity account. All right, well, where can you raise cash from? You can sell gold, you can sell treasuries, you can sell your Bitcoin, you sell something else to be able to potentially meet that margin call. So we're hitting the point here where it's going into cash raising time. And it's so funny how the TLT and the bond market change, how the story constantly changes, right? We were in an environment last calendar year where when the TLT went down and interest rates moved up, it was, you know, a sign towards inflation, and then that flipped here this year where TLT became a little bit more of a fear trade, where they were buying this thing up as a fear trade. So interest rates were going down, but it wasn't like the market was getting better as a result. It flipped. And then now we're in a new regime again where they are selling the TLT and interest rates are actually moving higher because you're beyond the fear trade and you just need to be able to raise cash. The note that Bill posted earlier that was written by Cameron Kreis, if I'm pronouncing that last name correctly, I think is worth reading out loud. Bill posted in the VTF at 356. Fixed income hits the panic button. It's not just equities that seem to be hitting the panic button. Front-end treasuries have ripped, and the curve is steepened dramatically, with 2s and 10s currently up by the most in a single day since the March 23 banking crisis. Beyond that, swap spreads continue to implode, with 30-year SOFR spreads closing in on an almost unimaginable minus 100 basis points. That's enough to raise some concern about treasury liquidity. This is the part that is like highlighted. It's enough to raise concern about treasury liquidity and the hoarding of bank balance sheet access. Hardly the sort of thing potential borrowers need right now. I mean, we are starting to go on to the verge of an actual crisis here. If these tariffs are implemented and not repealed as they were said last Wednesday, we will go into a full-on crisis of the likes of which we haven't seen before since the financial crisis. It'll be worse than COVID. They need to do something immediately, and everyone that I pay attention to who's got half a brain knows the exact same thing. I mean, this is just insanity at every level. But I'm just starting to repeat myself now. Again, I don't really have anything to talk about. I'm just probably airing out my frustrations about just how stupid this entire thing seems, that we've gone into this bear market for a reason that is entirely self-inflicted, and that we're having to deal with this environment where, you know, yesterday we're the most downside extended I've ever seen. Today we have the biggest intraday reversal that has ever happened. And I don't know. I guess I'll just leave it on the final point that I would actually still, if I had to choose, be a buyer here and not a seller, not a short seller. But it is very, very, very hard. That is all that I've got. I'm happy to answer any questions that anybody has. I did turn on the YouTube, right? How come I don't see it? Yeah, welcome, Liam. It's certainly a really crazy time to actually get started. But welcome to the team. From Rich, giving us some good commentary. It felt like we moved up on hopes he would make a deal before the implementation, and we sold off as we got closer to the implementation time. I don't see him backing down before midnight. Yeah, unfortunately, that seems like a very accurate statement there. So thank you for that astute statement, Rich. No problem, Penny. See ya. Thanks, Rich N. Not seeing anything else in the VTF for the moment. I probably got it all out for everybody. Popping over to the YouTube. Yep, it was a long day from Formula One. Monday's range is still in play. I'm watching closely. Yesterday seemed like a bottom. I would like everyone who went long versus yesterday's low to get wrecked, because that includes a lot of us. But I get what you're saying sometimes. And then pull the trigger on a reclaim. Yeah, I mean that could certainly happen tomorrow. I wouldn't be surprised. I mean, almost nothing would surprise me right now. A huge gap up wouldn't surprise me. A huge gap down wouldn't surprise me. A huge gap down that gets bought wouldn't surprise me. Also, kind of what you're describing, a gap down to below yesterday's low, but then you get like, it's not technically an RDR, but you get that reclaim. I mean, we would just be into any gap down below 490 in the SPYs. We're going to be absurdly extended again. But it's a balance of forced puking, panic selling, and margin calls, and the terrible news combined with the degree of downside extension. So we'll see. And yeah, patience has been important, big picture, in this market for sure. Also definitely agree. From Robert, are you collecting premium from your short puts positioning? Yeah, so I shorted yesterday some puts in Meta at a $460 strike price. I think my average entry price on it was probably like $4.70 on that. And I shorted some NVIDIA yesterday at an $86 strike, trading $10 above that. And I was able to get, I don't remember, a couple dollars, I think, worth of premium for it. And I shorted some Amazon yesterday at a 155 strike, and was able to get a decent price on that as well. I bought back more than half of my Meta. I was actually decently heavy on that Meta position yesterday. So basically at the open today, I got out of more than half the Meta because there's just so much uncertainty out there. I figured, let me just book it. I sold these at like I said, an average of $4.70, and then I was covering some today. I think my best cover was 80 cents on them. The low was 76, so that was pretty decent. So I took off a bunch of Meta. I took off a bunch of all of them. I took off more than half of the Meta, probably half of the Amazon, and probably a little bit less than half of the NVIDIA, which I'm smaller on. So we will see. But yeah, that's pretty much what I'm doing. I mean, the strikes are so far away for the price that I was able to get, 460 on these Meta puts, but I'm glad I took some off, because the way we're moving and the way we could potentially gap tomorrow, who knows. Back over in the VTF from Dave asks, question on vol. Do you think that these vol levels are sustained across multiple weeks, even if we do go lower here? I didn't trade during COVID, so this is my first crash, for lack of a better term. So I generally think that when you get a VIX that is like 60 plus, that you buy the market on that, because think about how the market works, right? Like you can this has not been the best example because we're still in the midst of this crash. But if you use like 2022 as an example, or even if you use the financial crisis as an example, in some ways the financial crisis was better than this because you get some bounces. Here, I guess technically we had a little bit of a bounce yesterday, but we still closed negative in the SPYs, like flat negative, but negative in the SPYs yesterday. So usually the way that the market works, I mean, if we just keep falling precipitously, most likely the VIX continues to move higher. But what tends to happen is when you get those precipitous falls, you get bounce backs from them, like what we had here. You got this vicious bounce back, got this vicious bounce back, got this vicious bounce back, got this vicious bounce back. So even at certain points when the market was trading at new lows for the year, the VIX was just getting back to like, I wonder if we can overlay the VIX actually with the market a little bit here. Yeah, as you can see, the VIX here would consistently bounce back to those highs. So I remember there was like a little theme in 2022 that was basically like, was it buy VIX 40? No, because we never really got up to 40. It was like buy VIX 35 and sell VIX 20 for a lot of the calendar year of 2022. Meaning every time that we would get one of these down spikes in the market, the VIX would work its way up to that $35 area or so. And then every time we got one of these bounce backs, the VIX would work its way back down to 20. So that was just like the consistent trade that for a while everyone was talking about in 2022. So first thing that you would note is that the VIX traded I guess yesterday, and was it yesterday that we got the VIX 60 also? Let me see on my other chart. It was, right? Or am I losing my mind? Yeah, pre-market. So the first thing that you would note here is that, and this obviously makes sense, in this 2022 bear market that we actually had, the VIX never really exceeded, I think the highest spike here is 39 almost. Never got to what we saw yesterday and then again today. But the other thing that you, I guess, want to note about it is that each of these successive new extension lows, even though they were new lows, wasn't giving you a higher high in the VIX itself. So, in other words, what am I trying to say? And this is one of the reasons why I was saying, VIX 60 now is something that we should probably buy. VIX 58 that we got into the close is something that you should probably buy, is because just generally the way it works is even if the market itself is going to go to new lows, you tend to get enough of that bounce back or enough of that rest period that brings the VIX down a little bit, and then you get the next actual wave lower in the market that brings the VIX maybe, I'm trying to just find my words. Let's say we bounce tomorrow. I'm just going to make up an example. We bounce tomorrow, so the VIX comes back down to, I don't know, comes back down to the low 40s or something like that, let's just say. And then eventually, a couple days after that, we make new absolute lows in the market. You are probably just getting a VIX that is then again getting back into these 50s or 60, not necessarily making new highs. So it tends to cycle like that. And again, generally speaking, VIX 60 you want to be buying the market almost always. But we are in such a unique circumstance right now. Like I said, nothing I've ever seen in my career. Appreciate the question. From Charles, MSTR maybe approaching that have to sell Bitcoin point. I don't know about that. I did read through, and it was quite some time ago now. Somebody in the VTF, maybe it was Tate, posted a link to the somebody on Twitter that really did a deep dive breakdown into the structure of how MSTR is buying their Bitcoin, and it didn't really seem to me like there are any forced sell points actually anywhere in the immediate future. MSTR itself could just continue to plummet, and then eventually you could hit a point where they can't raise any more money from the bonds that they sell in order to be able to purchase Bitcoin. That could certainly happen. But there's no real recourse. So I don't think that any of those bonds are expiring in 2025, or if they are, they're, so far the convertibles. They're so far in the money that they're fine. So I don't necessarily think that there actually is a forced Bitcoin sell point. There just becomes a point where their realized losses get insane and they might not be able to raise capital unless it starts to have a solvency concern at a certain point. And then that's a solvency concern is when they would be forced to actually sell Bitcoin. But I'm pretty sure that the dates on those convertibles are 2026, 27, 28, and that the bondholders don't really have any recourse to be able to force the company to buy them back early. From Eli, in the off chance that we gap up, how would you want to approach the buy side opportunity? Let the gap get faded, then buy into a dip. Just curious how you would tackle areas of interest in that situation. So it really depends on how big the gap is versus what the news is. Like a gap up like we got this morning, like a 4% gap up or 3% plus gap up is so huge. It's generally, and this has become an environment where our general rules sometimes are things that you actually don't want to follow. But it is generally something that you would never want to chase. Large gaps, period. Large gap ups, large gap downs, you generally do not want to chase gaps. When do you want to try to trade in the direction of the gap? After the market has had enough time to heal that gap on the small time frame. So the market either pulls back into a gap up or it goes sideways. The ADMA on the 5-minute catches up, and then you can see if you can get some continuation, depending on the time of the day, depending on, the 15-minute chart extension might be coming important if the gap was even big enough. So it definitely depends on the circumstance. I would just say, pretty generally speaking, that with rare exception, you don't want to chase gaps. From Billy, why is fear so great today when the oversold reading is at 0 again, but the last time we were at 0, most people wanted to be aggressively long? Well, last time we were at 0 was yesterday morning. Yesterday morning was a day 3 massive gap down. Today was different. The gap up this morning was large enough that it probably brought that, and I assume what you're referring to is the short-term composite that was at 0 for the second day in a row. Because keep in mind, we opened up flat yesterday, but into a 4% gap up. There's a high probability that this was trading well off that 0 into this 4% gap up. And then, to further answer your question, why is the fear so great? The fear is so great because of everything I was just ranting about in the beginning. We are implementing tariffs with no runway time into a global economy that is not ready for it, that has the potential to create economic pain similar to what we saw in COVID, where we had to shut down the entirety of the economy. That's why people are afraid. From Liam, off topic, but is there a video tutorial Lightspeed software through T3 or just YouTube? Just YouTube, or you can get they have a guidebook, I think, or also Pat. It can be a good resource for specific Lightspeed questions, specific trading software questions. See you, Michael. Trump coming back to the mic, not anymore. He changed his mind. Is market moving at all here after hours? No, not really. Looks like we're down $1.25 from where we closed, which feels like absolutely nothing with the way that we marked, the way that we move these days. MZ is saying, could it be because they want to cause big trouble to force a Fed cut? Yeah, that's been the that's been kind of the chatter that we talked about a little bit actually since February, and the market was still at highs. It was a little bit more controversial of a thing to say back then, but Charlie McElligott was the first one to really say, "Hey, it kind of seems like that there might be a plan here to actually create a recession, and one of the outcomes of creating a recession would be lower interest rates, which means that the government can refinance its debt at lower rates, and so could some small companies. But uh, you know, my counter to that would be that the Fed was already in the process of lowering interest rates at the end of last year. And if the course was stayed on, the Fed probably would. There's a good chance we would have already had a cut even in 2025 if everything just stayed the course as it was at the end of last year. But instead of just choosing to have some Fed cuts come in while inflation works its way back down to 2%, while growth stays strong and unemployment stays low, we decided let's create a recession to try to create the same outcome. Um, Obviously, there's some read-throughs there on cutting down on government spending, but you know, like you could have cut down on government spending and done the whole Doge thing and not done the tariffs at the exact same time. But we got to take a chainsaw to things, pun intended, that require a chisel. So that's where we're at. Anybody else have anything? All right, guys. It's Tuesday after a long week. I have no idea what's going to happen tomorrow. I have no idea how we're going to gap tomorrow. I feel like I usually have a good sense of how we're going to gap on the next day. I said yesterday in yesterday's afternoon meeting, I think we're going to gap up tomorrow. I didn't expect it was going to be as big as it was, but we sure as hell did. I have no sense at all tomorrow on how we gap. And, I'll just leave it with what I said in the beginning. Mark it down with extension of $33. VIX spiking to nearly 60 is something that I say that you want to buy probably 19 times out of 20. In the face of the event that's happening right now, those technicals could mean we get a huge gap up tomorrow. The event could mean we get a huge gap down tomorrow. It's just very difficult. So try to go to bed early and get some rest. I know I need to catch up on a little bit of sleep as well. And we'll just hope for the best possible outcome for our world. Have a great night, everybody.